And our next guest says that the number one question he gets from clients these days is, where are equity markets going? Well, his answer to that is that there will be corrections of 3 to 4%, but this is a time when you should go in and go long on stocks. We have Gill, investment strategist to the well-heeled at Barclays Wealth, and he joins us this morning from Singapore. Good morning to you, Manpreet. Let's talk about this optimism you have for stocks. What makes you so sure that equity markets are a good buy in the long term?
In the long term, I mean, ultimately, we're looking at where earnings are going. I think ultimately there are two drivers, two key drivers for equity markets from here onwards. One was, of course, valuations, which I think we've seen a correction of extreme valuations in the past 3-4 months. But ultimately, earnings expectations are pretty low. And if we do see a recovery in the wider economy, if we do see continued economic growth, most of all in the Asia ex-Japan region, that should lead to better earnings going forward. And that's really something we're optimistic on most of all in this part of the world, in the Asia ex-Japan region, if we're looking out with even a medium-term kind of investment horizon.
Manpreet, we were talking about bonds earlier and also currencies with Ray Trilla forecast. Why do you think equities are where investors should be right now, considering the run-up that we've seen? What about other asset classes in comparison?
No, we definitely believe that our clients and investors should hold a diversified portfolio. I mean, it's not to say there aren't good investment opportunities elsewhere. On the currency front, for example, we think emerging market currencies, particularly Asian emerging market currencies, have considerable scope to gain from here. We like the Indian rupee, the Indonesian rupee, and the Korean won because we think on a valuation framework as well as from a long-term expected economic growth point of view, those are currencies that are worth getting into. And those can, of course, be combined with other kinds of exposure to domestic equities. So there definitely are things other than equities to do, and we definitely urge investors to look at those as well.
Yeah, I just heard you say that you think the rupiah, and the won are undervalued by maybe 15% or so. But what makes you so sure? I mean, these currencies have also had a big run-up so far this year.
That's true, and I think it comes back to the question, like you said, we've been asked a lot, is that when you look at risky assets in general, not just equities or currencies, but across the risk spectrum, we've seen a strong move over the past quarter. Where can we go from here? I think the main message is that in the second quarter we really saw a correction in valuations from extremely low levels, from markets that were essentially pricing in a depression outcome to markets that are now pricing in more of a normal recession and hopefully a recovery later into next year. The key question is, where do we see the wider economy going? Where do we see the global economy, the US and the Asian economy going? And we think the most likely outcome still is that we'll head into a moderate recovery later this year and next, and see a much stronger recovery in this part of the world, in Asia ex-Japan. And that really is to us the most important thing, which is the reason why we still think risky assets are worth being in, even if we don't expect the same kind of gains as we did in the second quarter.
Yeah, your recommendations are not for a short-term bet, especially in these currencies. You're saying buy these currencies and hold them for a year to see the max gains.
Mm-hmm. That's correct. I mean, ultimately, these calls are definitely over a longer time horizon. These, we shouldn't be seen as short-term, trading recommendations. Obviously, there are many other factors that go along the way. But what we would do is really look for weakness, periods of risk aversion, even like you said, 3 to 4% downside in equities or other risky currencies, and really use those to build long positions. So a bias is definitely to the upside.
Yeah, okay. What about the risk of maybe devaluation, also government stepping in to prevent their currencies from strengthening, which would hurt their exports?
Mm-hmm. That's definitely a risk, and that's more of a risk if you see one currency, let's say, move dramatically out of line with the other. But again, it comes back to what do we see across the region? Are we seeing the region as a whole begin to grow? Are we seeing currencies across the region begin to rise? The Chinese renminbi is no doubt an important part of that equation, and we think that a slow and steady pace of appreciation over half a year or longer is something that we should expect. But ultimately the question is one is we expect to see a greater shift towards domestic consumption, which on the margin would make exports less important. And second is you need to look at what the destination of those exports are. I mean, ultimately, the stimulus package in China has been an important part of export-led growth in this region as well, definitely on the margin, if not at an absolute level.
Yeah.
So from those point
Okay.
of views, we think that there's still scope.
Well, Manpreet, we have an email coming in to ask about the Indian rupee, and Daniel Miller asked, what is your outlook for the INR and the equity rally in India?
I mean, to us, we're positive on India. We still think there's potential from here to year end for another 5 to 10%. Definitely, if we look at a lot of the large cap companies, they do look about fairly valued at this stage. So one needs to be more selective. At least we're looking with a 3 to 6 month horizon. But if you're looking further out, I mean, ultimately, India and China are the two economies where we continue to expect the largest economic growth. India is unique in the sense that there's a much larger dependence on domestic consumption as opposed to exports. And on average, Indian companies tend to have a reasonably high return on equity, and that really makes us, find India as an equity market pretty attractive for investors with the time horizon of a year or longer. And that really is closely linked to the outlook on the rupee. I mean, ultimately, foreign investor inflows are a significant explanatory variable, when it comes to the Indian rupee. And if equity markets do pick up, we would expect the Indian rupee to benefit, both from a valuation perspective as well as from the equities side.
Yes, Manpreet, let's talk about equity markets, because your targets, Barclays Wealth's targets for most of the markets, benchmarks have already surpassed for the year. I mean, what does that mean going into the second half and also for next year? But